Welcome to the next episode of Blockrevision, and as today's episode is broadcasted offline, there won't be a chat going live. But if you have any questions, just put it in the comment section below the video. So today's episode will be devoted to stock market. We'll talk about crypto, commodities, indexes, everything about where the money flows. So without any further ado, let's head into another broadcast. Alright, and let's start over with the first element of our transmission. So for now, I'd like to point at what's going on with layoffs. It's another company that right now has some layoffs ahead. Google to cut 12,000 jobs in a 6% slash to global workforce. So that's the last of the biggest, I would say, companies that decided for such step. So right now we can find the layoffs indicator showing us that in January that were massive layoffs waves that brought to such of a market anxiety about what may come next. But as this redundancies are taking place already, possibly next quarters might be not as bad as this normally a relief moment for the stock, when we are expecting at first that some layoffs may take place with the slowdown of the economy, but right after, if eventually we are technically going into a layoff period officially, the things from then on are going in the, I would normally, when the stock has very I would say fairly good fundamentals, things from then are going to be eventually better. So it's about Google. Previously, it was about Meta, Amazon, Microsoft yesterday, as I also claimed it in an episode. So right after, just look at this. Right now, the market is changing abruptly, and that's also the aftermath of the changing circumstances around the economic outlook around the globe. So reactions to earnings are getting bigger, while reactions to inflation prints and FOMC meetings are getting smaller. So we need to adapt. All right. So on the market, there is not something, not a thing like a fixed reaction to certain news or a sequence of news. Every time we need to adjust our expectations relating to where we are right now in a current macro outlook, and always assess that we may also be wrong on certain things when trying to find out that whether one thing is positive or negative for the market. In our subjective view, that might be, I would say, confusing when juxtaposed is to the market's opinion. So always be humble. That's my bottom line. Right now we are getting back to presentation view, US debt crisis, and that's what spokes many investors right now. So right now we are getting to the overall limit, currently set at almost 31.4 trillion bucks. There's a decision on how much the debt Treasury Department can issue. So the White House said the debt ceiling should be increased without conditions, and administration officials have said they won't negotiate on the matter. However, a group of Republicans in the House of Representatives wants to force President Joe Biden to agree to cuts in spending by threatening not to raise the debt limit. So we can find that Congress has eventually locked in an intense political fight over the debt ceiling, which threatens to upend financial markets sometime after early June. And we can find that we are starting another period of debt issuance suspension period where many of the decisions might be set. So as we do know, the opposition, that's Republicans, are trying to exert on the government that lowering spending, lower debt ceiling might be positive for stamping down the inflation. But right now, as we are in the some of a midway of possible slowdown or even recession, that's also not very advantageous for government to not raise it higher, as the artillery of tools that the government have to stave off those economic problems may decrease significantly. So Mrs. Yellen recently told that the Treasury should remain on course, and that's what I do expect, that until Joe Biden and also Democrats are still in power to large extent, this debt ceiling might be raised, but unfortunately at taxpayer cost. So that's what I do unfortunately expect. So what about the market outlook? So in terms of market outlook, let's find out what's happening on the market right now. So for this one, I need you to switch to another window that's a trading view. And it's not this. Let's find out about SPX. So right now on a weekly chart, it's not going. It's not looking very optimistic when we are engulfing recent price action, and right now extending the anticipation period before breakout. But anyway, we just look at the chart on a weekly without all those drawings. We may find that this rebound out of here wasn't really justified by any important, I would say, pivotal formation, if I may say, like this. That's why a kind of a double bottom formation might be expected. That's why we need to be cautious if maintaining at long positions right now. So downward trajectory of a price action to 3500s again might be somewhat expected by some analysts, where a double bottom formation is definitely a stronger pivotal formation than the I would say such of unhesitation that has been formed by drawing just merely this one candle rebounding out of this level. So will this 3500s will be tested once again? You may let me know what's your opinion in the comment section below the video. But right now we are reverting our stance to slides and going into crypto outlook section. So computing power to mine Bitcoin climbs. So it means that the mining difficulty as a measure of the total amount of computing power used to mine Bitcoin soared recently. So it means normally that many of the large entities has already maybe fallen into bankruptcy, but it has purified the the sector to that extent that right now we are finding out that not only the hash rate but also computing power, I would say that favoring so yes, the hash rate, but also amount of that I couldn't find it on a chart right now, but by the data, amount of mining companies also increasing its power alongside. So the search reveals that miners are plugging their computers back in the shore up revenue as Bitcoin rallies, but they have still expectations of higher Bitcoin prices, where those high energy costs and also upcoming halving might be stopping many, but we can find that there is a strong belief among industry that those valuations will increase upon the way. Regulatory framework necessity, so that's one of the discussion out of the World Economic Forum, where we have found that many of the bankers, many of the economists are expecting the crypto industry to thrive, but the only one thing that stops its adoption right now is this lack of regulatory framework. So if it accommodate to the bank standards, that might be very boosting the adoption, but right now, as we do know, crypto has standed in an opposition somewhat to banks' demand, when the sector has literally denied any type of regulations in order to not curtail any type of innovation. So we don't need that type of regulations that may evolve with the industry that will mature upon a time. So we need kind of a elastic approach when those elements of innovation won't be stamped down. So that's my call for governance. Let me know your opinion in the comment section. I'm very curious of it. So market movers is the next. So let's find out what's right there. And for this one, I need you to jump on to economic calendar. So on economic calendar on Thursday we had, is it this week? Let's find out this week. And Thursday was the day of inflation rate out of Japan, and it finally got to 4%. So it may prompt the governor to eventually hike their interest rates from the negative levels. And retail sales out of Great Britain right now, unfortunately for the Great Britain, is getting lower. So it means that once again recessionary voices may reappear. So that's it for this. But what about the earnings calendar for today? We have been through not many very loud names, but upon them there is Ericsson that right now as represent of technological sector has noted better results than expectations. So we are expecting right now next week to be kind of optimistic, where we have much more important brands than during the second half of this week. And right now we are jumping back into trade idea. Right now is showing I'll get you through SPX exactly. So right now you may find that SPX might be ready to go through a very difficult second half of a month, where we can find that only weekly right now we are forming somewhat called an engulfing pattern, where we are negating a recent price action. But very important is Friday, how we will close. When if we close decisively below this opening of the previous week candle, that would mean that we are much more likely to go downwards to 3500s. So for now, I would expect a little of price action closing this gap on 18th of January. But if it won't happen, and if we just won't close it and remain within this area, that would mean that on Monday we may start the week from a drawdown. So for me, if we stay around this area, that would mean for me that short position might be taken from here with possible entrance within this box, and with a possible extension of minus 18 with 9.74% with a risk reward ratio at 8.88. But for this, remember about that there is an important support right at the 3700, so it may stop right there and follow the path as followed when we go like this. So the way is almost never in a straight line, but very often in a zigzag way. So that's it. That's my proposition of a trade for today, but with this caveat that very important is where the market will close. So if it closes right around this this blue box right before market close, you might take an order and bet in this way, as I have just depicted. But remember about this one necessary bullet point that must be fulfilled. So that's it. Thank you very much for watching. Have a nice weekend and see you back on Monday.